Hey traders, checking in on the stock market today. Bears had absolute full control from the get-go. They did not really lose it at any point. And we're seeing a whole bunch of weakness. Key weekly support levels are coming into play. Big earnings day tomorrow. Big election next week. Lots going on. Let's check it out.
Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So when we last checked in, we were watching the S&P 500 futures chart, and the question was, can we form a 4-hour high or low? And the answer is absolutely not. Big drop overnight, and more follow through once the bell rang. Complete control of the bears. So going over the bounce today, I started this morning by closing out my SPY hedge short, which in hindsight was too early, but just wanted a fresh, clean slate to be looking for the bounce this morning. But there were red flags right out of the gate, which had me being very patient and very cautious. And the red flags initially were the recognition that we are back to seeing all of our asset classes inverse to the dollar. So looking at the dollar, which I forgot to bring up, but looking at the dollar on the hourly chart, last night from 2 a.m. to 8 a.m., we surged up. And while that took place, you go to any of our assets, gold, 2 a.m. to 8 a.m. collapse, S&P 500, big drop, crypto, drop, who else? Oil, drop, all during that point in time. It was like the inverse correlation cinched up again, synced up again. And you see that happen. You'll see correlations come and be really strong, and then they'll fade and disappear, and then they come back again really strong, which is why it's really important for us to constantly be monitoring how these relationships are working. And so with that dollar strength, we were then saying, okay, we need to see the dollar consolidate. The RSI on the hourly, 15-minute, and 5-minute heading into the bell ringing this morning on the dollar was over 80. So we say, okay, is the dollar hourly consolidation going to lead to markets hourly bounces? And we started pulling back with best case scenario in the sense that we lost the 5-minute uptrend in the dollar. It confirmed the 5-minute downtrend at 925 and got follow through. Look at the first 15 minutes of trading right before the bell, 920 into 940, the first 10 minutes of trading here. And you look at what SPY did during that point in time, and it was nowhere near as strong as you would anticipate. It was 10 minutes of green, straight into a pullback. So that had me very cautious. If that's the bounce that we're going to see on the dollar pulling back, knowing that the dollar is very likely to form an hourly high or low, that shows us a lot of weakness, and it was just all of our sectors at the low. What I needed to see is all three major sectors at their high of the day at the same time, and that did not happen in the first half hour of trading. QQQ and XLF were at the high of the day in the first 5 minutes, and XLV was not. And that was not my bounce criteria that I'm looking for. So I ended up playing a QQQ bounce, uneventful with how it played out. I did sell it at the end of the day, finally, for either a small win or a small loss. I don't even know. It's not even worth me going back and watching my averages. But essentially, just short-term little flips, but offsetting swing trade positions that are dropping. And that's USMJ and my SPY no-touch position. And patiently waiting for signals to get aggressive buying the dip. This S&P 500 futures 4-hour RSI is the lowest it has been since the actual dump. And that was back... Nope, wrong one. So we're going all the way back. This is the lowest 4-hour RSI since back in February and March. So that's obviously very notable. That's showing us the speed at which we are dropping down in waterfall-like fashion. And if we look at a 12-hour time frame, it's the same thing. This is the most beat up the 12-hour RSI has gotten since the original dump. That's very notable. If we see the 4-hour RSI fail to cool off overnight, I'm going to be looking for a bounce yet again tomorrow. We have key weekly supports approaching, and they are now in play. We know tomorrow's a big day with earnings in Google, Facebook, Amazon, Apple. And QQQ was certainly extremely weak today, showing no sign of a bounce whatsoever. And that has to do with positioning for those earnings, in my opinion. But look at the weekly for SPY. High, low, lower high. Equilibrium is the most likely scenario. What do we need to see for the most likely scenario to not play out? Volume. And we got 2 trading days left, and we're matching last week's volume. So the bears are showing up with the volume, and we're now looking at 319.80. And there's a potential play off that support level with how beat up we are in the short term. But keeping in mind, even when we do change hourly trends, we're just going to be looking for daily lower highs, and bears will be waiting at those daily lower highs. So watching for a potential playoff weekly support, watching to see what the volume and what the bounce looks like, and then watching for a potential daily lower high for bears to be looking for entries. If weekly support breaks and we confirm a weekly downtrend, zoom out because monthly consolidation is getting follow through. We'll still watch for a monthly high or low. There's tons of space for it to happen. We'll be watching monthly EMA support, but it's all about that weekly level in the short term, 319.80. QQQ, same deal, all bears. Again, just look at the 5-minute time frame this morning. There was just no fake outs at any point. All lower highs. We broke resistance by 14 cents. And then just lower highs, a little end of the day. Bull move attempt straight into a dump. I was very fortunate to have exited just under 275 because it got real ugly again. So daily, or let's go to the weekly here. 260.11 support. And we're going to be right there if we see a bearish reaction to our tech earnings tomorrow. That support is still 3-4% away, but we are certainly closer than the bulls would like to see. And if you go back and watch the videos we were putting out in September and October, this entire bounce we're saying we got to be cautious of these weekly lower highs due to the size of the pullback that we've seen here. And obviously that has followed through in a very significant way. All about weekly support. XLV, 177. We're only 2% above that level. Weekly support is in play. Now, we're going to be doing the same thing that I do on the 5-minute time frame for day trading on the longer term charts. If only one sector breaks weekly support and the others don't, we know to be looking bullish. If all of our sectors break weekly support, that is a big stamp of approval that the bears are proving it. So those 3 major sectors, and the third is XLF, which is in a very different standpoint, but the clear support that needs to break on XLF is 24, make that 22.94, and that's in play, 3% away. So if all of our weekly supports break on XLV, XLF, and QQQ, it will be very notable. If only one breaks, we'll be watching to buy dips, and if none of them break, we'll be watching to buy dips. Biotech sector, daily support of 113.84, broke that level, not a ton of follow through. Again, a very different day than what we're seeing our other sectors have, and we are not close to our weekly support on this current pullback. So the biotech sector definitely holding on better than others. SMH, again, closing lower than we have opened 11 of 12 days in a row. That is a notable streak. The biggest difference in SMH is the amount of space above weekly support. I will absolutely be watching. If we get to daily oversold conditions in a weekly uptrend, that's like getting into hourly oversold conditions in a daily uptrend. That's like getting into 5-minute oversold conditions in an hourly uptrend. That's when I scout entries. So getting crushed, but a lot of space above support. 163.57 is the next most important support level from here, and we are 5% plus above that level. Solar sector held on today very well. Low of yesterday broke. Actually, I take that back. We held it by a penny. So double bottom and a double top. We couldn't break the high of yesterday by 26 cents. But again, just the fact that you're holding up green today, big win. We're watching for a weekly higher low to be set, and we'll see if any bounce in the broader market helps benefit the sector now that the downside is not hurting it as far as today is concerned. 73.08 is short-term daily lower high resistance. Congrats to the VIX bulls, finally got follow through. So we broke a wall of resistance on Monday, inside bar yesterday, and then big time follow through today. We knew the market was not proving anything for the bulls yesterday. Certainly couldn't say we're going to collapse today in response to that. But at no point this week, after the first 20 minutes of trading Monday, at no point have the bulls in any sector, any of the major sectors that we follow, they haven't proven anything to us. There's been no fake outs, no nothing. It's just bare control. And the VIX now is looking at 44.40 as the next level, keeping in mind that there's a whole group of traders that look to go bullish on these volatility spikes, and there's a whole bigger group of traders that looks to go bearish once that momentum fades. Because that is the ATM play time and time again throughout history. So there's no indication that this top is coming in, but you know people now are starting to pay attention to be watching for those bearish entries. Hourly uptrend is our guide. 37.80 is our little higher low. And 44.40 is the next level. So the dollar. So why was that move so significant on the dollar? For a number of reasons. The first being we're creating a lot of space for the potential of a daily trend change. If the daily bulls can change their trend eventually into next week, that's our weekly higher low being set. And SPY is a lot closer to confirming a weekly downtrend than the dollar is to confirming a weekly uptrend. So it'll be very interesting to see if the dollar is able to confirm a weekly uptrend and what that does to all of our asset classes. But first things first, anything under 93.90, just a lower high, and then we need that daily trend change. Keeping in mind that we did bounce once before, and that looked significant enough for a daily higher low to form. Obviously, it didn't happen. This is an inverse head and shoulders attempt. Once we top out, look for the higher low, try and change the trend. Metals with the bear break. So gold on the daily, we were just watching this range. I don't care about anything as long as we're in that range, and we are no longer in that range. Weekly lower high is set. If we break the only nearby support of 1848, the weekly downtrend continues and the monthly consolidation continues. And a break of 1848 will begin to shift things from favoring monthly continuation to then potentially favoring still a higher low. Absolutely, we got all the space that we need, but then watching for the potential of a monthly lower high to be the next move. All depends on whether we break 1848 and whether we get some follow through down to 1800 and beyond. Silver's doing the same thing, weekly lower highs set, all about 2166 support from here. So there's a potential playoff support if I want it to be an aggressive bull, but I am being a very patient bull. After great gains in 2020 on gold, I am patient. Miners, not surprising, we broke the low of consolidation. So the weekly chart is already confirming lower lows, and we've known that for days. We could say, okay, the miners are clearly weaker than metals, and if the metals lose their daily higher lows, the miners are not positioned well at all to hold support. So weekly lower high and lower low, and again, the monthly is shifting from a potential monthly bull flag to having us still looking for a higher low, but then looking for the monthly lower high to be the next result. And again, being able to get comfortable gauging what consolidation favors continuation versus what consolidation favors tightening ranges is a very important skill to sharpen as a trader, which is why we were able to say on this weekly chart, watch out for the lower high, because the size of the pullback was significant enough that continuation is not necessarily the most likely scenario. Oil, right down to the support, double bottom at 36.93, and very little bounce off that level. So again, here's your drop from 2 a.m. to 8 a.m. when the dollar was doing its thing. And the weekly will continue a downtrend if that double bottom breaks, and the monthly will continue in equilibrium. High, low, lower high, right off EMA resistance. I can remember 2 months ago talking about if this is a day trade, I'm shorting at that level. One day I might be a swing trader, but the profit is not worth it to me to just constantly be having that thought and thinking and looking at charts at 5 in the morning when I wake up and roll over. It's just not worth it psychologically for me. But the same things on the monthly happen on the 5-minute. So that's the one good thing about technical analysis, where you can easily apply things from short term to long term. And there's a lot of individual names that have the same monthly equilibrium shaping up. Disney is one that just set its monthly lower high. The energy sector as a whole gave us the monthly lower high a long time ago. Look at XLE quickly approaching the original dump lows. Natural gas, still all bulls. $3 psychological resistance, a bit stubborn, not surprising. And if we reject from it, we'll be watching 2785, little daily higher low support. Crypto pulled back with the broader market as well. Again, going to determine tomorrow the direction I'm looking in. If we see a bounce all night overnight, I'm looking for a lower high on the 4-hour time frame tomorrow. But in the absence of that, absolutely still scouting bullish entries. And today for me is just live to fight another day. So I have a direction I'm looking. If I don't see a setup that I like in this direction, then I am not looking to trade much. And that's the way that it ended up playing out. And that is where we stand in the short term. Weekly supports. And that's what it's all about from here. So aggressive bulls are playing off weekly supports, and they're looking these bears dead in the eyes and saying, I see all your momentum, and I am staring fear in the face and going against it. And we'll see if that would end up working out. I personally don't like the risk to reward enough to be looking for that kind of play myself. But I am very curious to observe how the next week of trading goes. So stay protective out there. Again, use your stop losses. Without stop losses, the last 2 days of trying to buy bounces can get very, very ugly very, very quickly. And it's the difference between maybe a half-day loser with a week loser. And that's a very big difference. Thanks again. Do good things. Like, comment, share, subscribe. Have a good time. Be nice. See you tomorrow. So today we're going to plant some garlic in this bed. Step one is weeding it, and I use a scuttle hoe, which I'll show you in just a second. So the seed just looks like cloves, and one of those exponential gainers, you plant a clove and then you get a whole head. So we've got elephant garlic, German white, and German red. Hardneck varieties. And garlic is definitely one of the easier crops to grow. You plant it, you tuck it in for the winter, and that's about it. If it's real dry, you'll water it a couple times, but it really just does its own thing, and you can pack a lot in a little area, as I will show you. So this is a scuttle hoe. It has a few different names. Stirrup, straddle something. I like calling it a scuttle hoe. It's my favorite tool because it gets in the soil, and this is a little bit of a sharp piece of metal, and it gets under the roots. So if I want to get up whole clumps like this, I just run it over, and it busts up the whole root, and I can take out the whole plant. And then you just go through and get all your clumps, and you leave the nice soil. So I got most everything with a root system out. Everything that's left will just decompose in the bed. And now I lay out a few different rows. I could probably fit 4 different rows here. The elephant garlic is bigger, as the name implies, so it needs a bit more space. But I just put the cloves where I'm going to lay them out as a bit of a blueprint. So that's about the spacing, and every clove will grow a garlic head. Now you just stick them in, maybe a couple inches in the soil, pointed up, and then you cover them with hay, or actually you want to use straw. You don't want to use hay with seeds, or leaves. I got a bunch of leaves chopped up, so I'll use that to cover them over the winter. So I'll take a lap around the yard in this bad boy, fill those bags up, and then use those bags to cover the garlic. Now just give it a watering in, and she's good to go.